Hello, everyone, and welcome back to the Market Bites podcast. It is the 23rd of April, just gone 4 p.m. here in London. As always, with 2026, we've got to be dropping the exact time and the exact date because we're just one headline away from utter chaos. But we had another positive week in markets, so we're, I suppose, right now pretty happy with things, and certainly for people that bought the dip anywhere around the 31st of March or a few days after, for equity markets and individual stocks are sitting pretty happy at the moment. It's not all sunshine and rainbows, of course. There are some stocks that have moved a little bit lower. We'll talk about Tesla in a moment. They had their earnings out. We're also going to focus a little bit on cannabis stocks. We'll have a quick look at Bitcoin. We'll discuss the Fed. We've got it all covered, and I'm joined by the two of the very best to help us with it. Neja, first of all, how are you doing? What have you been up to?
Hey Sam, hey Brett. I'm doing well. It's busy, like one of the busiest weeks in earnings season, but next week's gonna be even busier. Overall, I'm doing good. It's nice to see markets doing better finally. But as you said, everything can change during our recording, so we will see how that goes. How are you guys? How was the F1 event? I saw some that you were there.
Yeah, that's right. Yesterday we were at Alpine F1 HQ, which is in a place called Chipping Norton, which will probably be a name both you two have never heard before, but it's about an hour and a half drive from me. And yeah, we did a bit of a chat with some of their staff at the factory. Had a little look around. Incredible. And by the way, the amount of AI these F1 teams are using just for marginal gains, whether it be on the race day or in the factory, is fascinating. But yeah, no, it was good. We did a quick presentation just talking about the markets. It was always like, look, obviously what I'm saying is what's happening right now, but by the time we finish, there could have been a headline that comes out. So we're still very much in a headline driven world. And yeah, no, it was good fun. It was good fun. Brett, what about yourself? And we were just talking before. You're off to Vegas next week for work, but how have you been? And other than that, what are you up to?
Yeah, that's an important disclosure. Yeah, going to Bitcoin next week. Big 3-day conference in Vegas. So, I can't remember if we talked about it on the podcast or if it was, sort of like in our pre-show discussions at one point, about like the sentiment and the mood around Bitcoin with, this big pullback we've had over the last couple quarters. It has been surprisingly resilient. I think a lot of long-term holders in Bitcoin have sort of gotten used to that volatility. They've been used to the 50% pullbacks, and they wait for sunnier, shinier, happier days. So I'm like really interested to see, because last year when we went, I don't know if Bitcoin was at all-time high. I think it was at or around its highs. It was like going to be definitely a different situation this time. I'm wondering like what the mood will be like, if it'll still be as upbeat as it was last time, or if maybe it's a little more tepid. So that'll always be kind of interesting with that group.
Yeah, it'd be fascinating actually to hear your insights on that, just floating about, speaking to people, and yeah, just getting a general feel, because I share your view, and we've spoken about it on the podcast all year, really, that in certain times after peaking in late last year, it's held up all right in fairness, and we got down to 60,000, maybe a little bit above or a little bit below. I checked yesterday morning and this morning around sort of 78, 77,000, which is, a decent jump from those lows. And it does have that feeling that, maybe the worst in terms of price action is behind us for a while. Of course, things can change. They really, really can. It just takes a big, negative escalation geopolitically, and Bitcoin in theory would come under pressure as well. Yeah, it'd be fascinating to hear all about that. And as you mentioned, a big week for earnings, 15% of the S&P 500 will have reported by the time we get to the end of the week. And next week's a massive one, big companies report, and we can touch upon that at some point as well. But last night, and they're probably top of the bill, I would say, Brett, for earnings that people were focusing on. Tesla, down a little bit. What were your sort of immediate reactions to that?
Yeah, I mean, when you look at just the headline numbers, or even a little deeper than the headline numbers, margins, free cash flows, obviously earnings and revenue, all good results. I think revenue is a touch light in terms of expectations, but across the board, it's actually a pretty good quarter. The company has a strong balance sheet, cash flows are strong, but this seems to be this scrutiny of CapEx, which is a theme we've seen for basically all the other Mag 7 players. Each, a year ago, them coming out and saying we're spending X, in that X being in tens of billions of dollars on investing. What is, for the most part, a lot of these are AI investments. But you look at Tesla's obviously spreading their eggs a little. They've got a few more baskets to work with in terms of the robo taxis, their Optimus, all these other things. But the theme being basically that MegCap Tech says, hey, we're going to spend this much more than you thought we were going to spend. And investors are not rewarding that anymore. I don't know if that's a theme that plays out really well. Next week will be a really good indicator of how investors feel from so much of the other Mag 7 and what they're spending and doing. But I think for me, the big takeaway with Tesla is that investors are not really rewarding that spend. It's more like, okay, you can spend it, but you're going to have to prove it. And right now, we're not going to give you the benefit of the doubt. And that's not company specific. That seems to be sector wide at this point.
I think that we just
sorry, Nezha, you go.
Sorry. I think that we just predicted few episodes back what this earnings season is gonna be about. We literally said it's gonna be about spending and also the guidance. And here at Tesla, it's exactly that, because on paper it was a good quarter, but when he mentioned spending and when he mentioned all the things that are ahead for them, it just didn't convince investors, and I think that's why the stock was down. And even if we take a look at their year-to-date performance, they're down 15%, and today at market open they were down 4%. I think it's a bit better now, but anyway, it can be clearly seen what investors are focusing on, and I think it's the same with other companies this earnings season, isn't it?
Yeah, it really is. I mean, I was looking at the chart just as you were talking there. It's down about 3%. From a technical point of view, I know there are a lot of people that listen to this that will look at the chart as well. And I spoke about this morning and yesterday. It felt like this week where it closes will be pretty key, and it's trading at a level now where in the short to medium term the bulls would really want to defend about $376. So where it closes, whether it's above or below, I think will actually be quite telling. Yeah, you're right. 2 weeks ago, let's give ourselves a pat on the back. We mentioned that these things would be important. A few dates for people's diaries then for next week. On the 29th, you've got Microsoft. On the 30th, you've got Apple. The 29th again, you've got Amazon and Google and Meta. I mean, wow. I mean, the 29th, so what would that be? It's Thursday, say next Wednesday. Meta, Amazon, Google, Meta. I mean, Microsoft. I mean, that's a big week, that, isn't it, Brett? I mean, will you have time to keep an eye on that, or will you be too busy living the dream in Vegas?
I don't know. The dream is a stretch. I mean, the one advantage, I guess, in Vegas is I'll have a 3-hour time zone difference. So those numbers will start rolling in at like 1 p.m. for me, which I know is going to work in the opposite favor for you guys. But it's sort of one advantage for next week, I'd say.
Good stuff. Yeah, we're helped here. I know Josh Gilbert. A lot of people will know him. A lot of the time, I'll wake up in the morning and he'd have written a lovely report about what's going on in individual stocks. So we're covered from all bases, which is good.
That's hilarious. It's going to bed for me when I get Josh's summaries.
Exactly. You get no matter what happens, there's always someone giving an update on something, which is great. It's what we need from the team. A few other earnings then. Obviously, it's not just Tesla that is down. I mean, by the end of the day, they may well have recovered, by the way, but we'll call it 3% at the time of recording. It's now, which I think was one that a lot of people were looking at, and on the face of it, for many people, they delivered a pretty solid quarter. They raised their full year guidance as well, like a lot of companies are going to say, because of strong AI demand. But we're down, when I checked last, about 12%. And we also mentioned a lot of companies are going to mention, the situation in the Middle East, and they've come out and said that that's delayed some large deals. So the share price has come under a little bit of pressure because of that. Really, it's an interesting one though. With not just ServiceNow, Leisure, but companies in general. When you talk about, or when they come out and say, the situation in the Middle East has affected their business, investors aren't going to be like, okay, cool, we'll give you a pass. They are in the short term going to be like, all right, sweet, we're going to sell then because it might last longer.
Yeah, exactly. I was regarding geopolitical situation. I was more focusing on airlines because airlines are they are affected so much with the fuel prices, and they gave us, I think, the clear reminder how geopolitical situation is feeding into earnings. Because just to mention a few, United Airlines did well; they beat expectations, and premium demand is still strong based on their earnings. But fuel costs are rising, and because of the situation in the Middle East. However, it was quite interesting to hear their CEO mentioning that this uncertainty can create an opportunity for them because he said that they always performed well during stressful situations. But at the same time, it's clear that margins for airline companies are under pressure, and the Southwest company, as another example, was even more direct because their guidance disappointed, and mainly because of fuel, and that's why the stock reacted negatively. And so I think that those kind of companies really give us a clear perspective how businesses are performing under this kind of pressure. Because yes, we are seeing situation easing for a week now, but still they are in very uncertain situation for the next few months at least, because they have no idea what's going to happen and how those costs that are very important for them going to affect their business.
Yeah, absolutely. I think that's that uncertainty, isn't it? And you speak about, when we speak about, just how the retail investor is thinking, they hate uncertainty, let alone the actual businesses themselves, and having to plan for all of these kind of things as well. So it's going to be a fascinating next week, but also the back end of this week as well. And when I was just sort of doing a webinar with Lale for our Diamond Club members on Monday, we were looking at the earnings, and actually they weren't too bad, to be honest, overall. So it's been not a bad start. Yes, companies are still going to get penalised by investors if they don't like the report. I mean, Netflix, I think, is officially back in a bear market after their earnings last week, and when the co-founder steps down, and there's a few other bits they're not happy about. Investors are not going to be too pleased in the short term. One company that reported not too long ago, Texas Instruments, is actually positive though, up 9%, and it was sort of the big standout, I suppose, in recent times. Big earnings beat, strong guidance again, which obviously what a lot of people focused in on. And so for their next quarter, they've raised their guidance there as well. A lot of analysts have raised targets. I know that's not the be all and end all, but it just helps with sentiment. And there was good demand from their data centers, and improving industrial markets drove the upside. Overall, I think still we can say that earnings have been okay. I mean, next week though, Brett, by the time we get to Friday, we're going to know a lot more about the whole market, aren't we? Certainly in the US.
Yeah, I mean, mega cap tech. I need a calculator to add up what type of market caps we're looking at for next week, just in that group alone. But you kind of hit that that really heavy spot of earnings where it's really like this week and next week, maybe the following week. You're going to have everything from you're going to have tech, so you have Spotify, you're going to have mega cap tech, you're going to have your UPSs and Coca-Colas. The two that I always love watching are Visa and MasterCard. They're just tapped into the consumer. They know where the trends are. They know what people are buying, if they're running behind. They just give such a good pulse on really what's going on with that consumer, which is just so important in terms of how the economy in general is moving, how households are doing. You look at sentiment surveys, they're so bad, but then you look at retail sales and they're so solid. It's like this, it's very much of this look at what they're doing, not what they're saying type of vibe or takeaway. So I'm just like the banks, that was our focus, week and a half ago. What do the banks have to say? What are they seeing with their clients? The takeaway there was pretty reassuring, I think, across the board. we even talked about it in one of the episodes. But yeah, that for me is really what I'm going to be focused on. The other thing would be like software. It's kind of weird because software, you get like this tech rush. You get these like 6 of the 7 biggest names like right off the bat. When you look at the 2-month schedule of earnings season, where software is like way in the back half. So we don't really get a ton of software names right up front. ServiceNow reported last night they were sort of like, I don't know, are they going to be the tip of the iceberg? I guess that's my wonder, because right now we have this like very like two-sided AI trade. Like one side, you mentioned Texas Instruments, you have like Micron, Marvell, Texas, you got the optics plays like the Lumentums, the Coherence. Those names are exploding. Like anything that is tied into like the hardware pipeline side of AI is being rewarded with gains. And then you look at software and it's the complete opposite. They're getting slaughtered because of this worry of AI. You've mentioned ServiceNow's numbers were actually pretty good, but all it took was like one whisper of worry that, hey, maybe their moat isn't defensible against AI, and they just killed it. It's down like, I think it's worse than the open. It's like 15 or 17%. The IGV ETF, the software ETF, was like up, I think 8 days in a row, almost 20%. That's down 5. It's like all these software names this morning, like even Salesforce, Palo Alto, they didn't report earnings. They're just getting hit again on this like very scared sentiment within this space. And I don't know when we talked about it. I don't know if it was 6 months ago or 6 weeks ago. If this whole market feels like a blur now, but we talked about this risk with software being not necessarily the businesses. This is a really good example of, for the most part, good businesses and broken stocks. Like the businesses are doing well, are growing, revenues growing, the cash flows are strong. The stocks are crap. They're just getting killed. And I think the risk with them, the longer term risk, isn't to their businesses or to the moats, it's to their valuations, right? So like if a stock typically trades, pick one of these names, if it typically trades between 20 times forward on the low end and 30 times on the high end, if that shifts down to, or excuse me, it trades at 30 and 40 times of a range, if that shifts down to 20 times on the low end and 30 times on the high end, it can still be a great business, but the stock doesn't have to go anywhere for that valuation to really like play a huge factor in how these names are going to trade going forward. Again, I don't know that re-rating is going to be permanent, but we're certainly seeing it now, and it's been that way for a couple quarters now.
Yeah, it has. I mean, it's the market is fascinating, just how it goes from one topic to another, especially during earnings season. You make a great point there about how certain stocks got hit because one reported, even though the others didn't. And I think for a lot of retail investors, that is worth keeping an eye on. If you have a company, certainly a big company that reports within an industry, and it's super good, the share price is up 5-10%, you're likely to see similar names do that as well, and obviously vice versa for really bad days for individual stocks. We'll wrap up the podcast in a bit, just talking about the Fed next week. They've got 6 days and a few hours until their next monetary policy decision, but we're going to go from those stocks we just talked about there, software and tech, into the world of cannabis. For those that are listening on the podcast, don't worry, we aren't smoking live or anything like that. We are just talking about cannabis stocks. Nezha, you've had your eyes on it. You've been focusing a little bit into all of that.
Yeah, I actually just saw news yesterday and today about how there is a big change in the US regarding cannabis. And yeah, what happened was that actually cannabis stocks jumped after US Justice Department made a big change. And this big change, in simple terms, it means like that cannabis was treated like a drug, and now it's officially recognized as having medical value with fewer restrictions. So that gave a boost to many cannabis stocks. I'm not following many names individually, but many of them are in eToro Smart Portfolio. I think it's Cannabis Care. It's the name of it. But yeah, What's behind the story is that investors are actually excited mainly about taxes, actually, because right now many cannabis companies can't deduct normal business expenses because of strict tax rules, and making this big change means that higher profits for those companies because they will be able to fix that. And there is also optimism regarding research for cannabis because it will just make it easier for those companies, and also banks and investors will be more willing to work with cannabis companies because now many funds don't invest in them due to different restrictions and so on. Because for many years now, I think that cannabis companies in general were stuck in this weird situation because many states allowed cannabis, but federal law was much stricter, and now it's changing bit by bit, and this rally was really observed across the whole sector. Big names, like some of the names like Kronos, Aurora, and like some others, they jumped between 10 and 20% on the news. So yeah, I think it's quite a big news for investors interested in this sector, but we will see what that means on a long term and in mid term, because it's a great news, but we will need to see the results of that. The real question is whether the companies will be able to turn this news into a better profits and stronger businesses, or it is just like a temporary boost which will eventually ease. For today, it's a great news, and we will see how it will turn out later.
Yeah, I mean, I remember speaking to a CEO on Conversation with Leaders of a cannabis firm, and they mentioned that type of thing was going to be a hurdle to overcome, and I imagine they would have wanted it to be a lot sooner than it was. And cannabis stocks have certainly been volatile, haven't they? Over the years, people rightly so would have been eyeing up as a good opportunity to think longer term, but they've had to be super patient, and many of those stocks have had some bad times. But sometimes you look back on a headline like this in a few months or years or whatever, and that was the turning point, and those businesses can really thrive. I mean, I remember there was a good friend of mine. I can't remember the name of the stock, but he came to me one day. It was on WhatsApp, and he was like, "David Beckham is investing in this cannabis company." So he put money straight in. Didn't even look at what the company did or anything, or even if it was a real story. I don't even know. I didn't check myself. And then I spoke to him, a few months later, and it had gone down like 98%, or something like that. So always do your research. But that said, something like this is probably worth looking into for those people that are keeping an eye on those. And you mentioned the smart portfolio. A little bit of advice for people listening to this: if there are different industries or sectors you think are going to do well in the future, one option is, of course, the smart portfolio, but also going within that smart portfolio, you can see what companies are in those portfolios, and maybe you want to go down an individual stock route instead, or just to get inspiration. It can be pretty useful. Right, okay, our last topic, and I've got a quiz question for you both. Who went first last time? It was Brett. So Neja, you're going to guess first. So the Fed meeting is next week. What do you think is, as of the Fed Watch tool, the CME Fed Watch tool, which I know a lot of people use, what is the percentage probability of a hike next week?
Hike.
Mm.
Let me think. I will say like 5%.
5%. Brett?
I feel like I'm cheating on this one. I follow the Fed Watch tool a little too closely. I think it's 0.5% this morning.
Yeah, 0.5%. Which, I mean, listen, imagine us sitting here in January and saying, in 3.5 months, the chance of a hike is going to be higher than a chance of a cut, which is, I'll tell you what, can you imagine in a week's time if they decided to raise interest rates? That would be mental.
We would have a different market.
We would. We really
were
would.
discussing cuts before, and now there's a hike on the tables.
Oh, goodness me. I remember when I first got into the world of trading, which would have been 12 years ago, and someone who was sort of, teaching me the ropes, he asked us all a question, and he goes, "Who do you think is the most powerful person in the world?" and now his actual answer now I would say is different. But I was young, naive. I was like the Queen, and other people were like the president. So at the time, Barack Obama, and he kept saying no, so everyone just kept saying ended up saying stupid names, and he was like, no, the most powerful person in the world is the chair of the Federal Reserve. Someone who sets interest rates and all follows. And at that time, of course, it was Janet Yellen, I believe. I think now the most powerful person in the world is the president, and the influence that he has on the stock market. But the Fed are massively important. So Brett, you said you're keeping an eye on the Fed watch tool. You got it right. So 10 points, but they're not going to do anything, are they?
No, I don't think so. I mean, the fact that we're discussing a rate hike, even in the rarest of possibilities, is such a change from, like you mentioned, like 2 or 3 months ago. I mean, at the worst case, we were looking at we're on hold until we can cut. That was like pretty much the consensus. And now it's pretty much the consensus still. But the fact that there's a rate cut or a rate hike as an option, that was not an option a couple months ago. So I think this really does go to prove, though, that so in the long term, interest rates definitely matter, right? Like if we have a rising rate environment, a high rate environment, that makes it really difficult for risk assets, and conversely, low rates, it's much easier, happier time for bulls. But I think it goes to show that in the shorter term, the interest rate narrative can be loud in the headlines, but not matter so much when it comes to the actual pricing of equities. And I say that because I can't remember now if it was 2025 or 2024, but coming into the year, it was like the market was like pricing in like 6 rate cuts. And then within a couple months, it was down to 1 to 2 cuts, and the market was up like 10%, all-time highs. And similar to now, we've gone from this idea that the fact that a rate hike, even if it's a 0.5% chance, is even being discussed. The NASDAQ went on a 13-day runner to all-time highs. I mean, that's flying in the face of what the narrative is being spoken about in the news, in the headlines. So monetary policy is extremely important, and it does matter for like that longer term, intermediate term trends. But on that short term, week to week, day to day basis, the market can kind of do its own thing. It's not going to have to. It doesn't have a direct correlation to interest rates.
No. All right. Our final word of this podcast before we wrap it up, Nezha, is yours, and I want it to be one word. Will the Fed cut or hike next when they make a decision? Not obviously keep things on hold, but do you think the next move, cut or hike?
Cut, but not very soon.
Yeah, no, I would be with you. I think it's going to be down the line, if at all, this year. We'll cover it all, though, everyone listening. Thank you all for joining. We'll be back next week. Brett, hopefully we'll be able to get you. If not, enjoy Vegas. I'll be very jealous. Hope you have a little bit of free time to have a party or not. If your boss is listening to this, of course you won't. Brett, Nezha, as always, thank you very much.
See you guys. Enjoy Vegas, Brett.
Thanks.